Good morning, everyone. Once again, this is Black Forest coming to you with another market analysis video. This morning, we're going to be looking at the Euro USD, okay? So before we get started to break down this currency pair, we have to say that this video is for educational purposes only. This is not financial advice, okay? We all know why you guys are here. You guys are here to find good, credible Forex content that can help improve one's ability as a trader and to help put a little bit of extra money in your pocket, especially in these troubling times with prices going up all around us. Okay, so let's see what we can do to help out with that. Okay, now before we get started to break down what's physically going on the chart, you know us at Black Forex, we always like to talk about the fundamentals. What's fundamentally going on with the euro and what's fundamentally going on with the USD, and we'll respectively start with the euro. Okay, now we did get some poor economic news come out about the euro heading into, during the latter part of this trading week. And around, let me see, 3 o'clock this morning, we also got some further bad news about the euro too. So it's technically with all this bad news still classified as weak. Okay. Now, with that being weak, we also have several other factors that's also contributing to its weakness. There's a dark cloud of inflation hanging over the entire EU. So, all the European countries that make up the European Union, right? All those countries are suffering from inflation. So, the entire European Union has inflation hanging over it. Then, secondly, there's a lot of fear, uncertainty, and doubt about the entire European continent's economy, just due to the destabilization that's being done by the war fought by Russia and Ukraine. And the sanctions that they put in place against Russia is also having a reverse effect on on the entire EU, where they thought these sanctions were going to hurt Russia, and it's actually hurting them a lot more than what it's hurting Russia. Okay. So these are the factors that's contributing towards the euros being weak. Okay. Now, with the USD, as I stated in previous videos, we do have a dark cloud of inflation hanging over us too. Our government did increase. The American government did increase the interest rate did increase the interest rate from 25 to 50%. So we're going to have to see how that increase in interest rate is actually going to combat inflation. Okay. Now, if the inflation is not being combated fast enough from the interest rate being increased, this can cause the USD to start acting as weak. Okay. If the increase in the interest rate is not enough economic policy to combat inflation, then the USD will start acting as weak too. So we're not dealing with which currency is stronger than the other as much as we're dealing with which currencies are weaker than the other. Okay. Now, the reason why the USD looks like it's been much, much stronger, especially on this chart, than the euro, is from a simple observable fact, as I stated in previous videos. There is a war being fought on the European continent, and there is no war being fought on the American continent. Okay, so due to this fact, the euro has been performing much weaker than the USD, but over the couple trading weeks, we have had some initial strength through retracement. Okay, so now we're going to get down to what's happening on the charts. Okay, so we've had some retracement from initially going back down, but as you can see, this is not going up as momentive, as aggressive as this came down. So this is kind of a telltale breadcrumb sign, hint, hint, that there's a possibility price is going to roll over some time and continue to start going down. Okay, but we want to wait for the chart to tell us when that's going to happen instead of just saying it's going to happen beforehand, because we may have some impromptu news that may make price jump up again. Okay, now what it's more so looking like is that we're in this area here and we could continue to range out, have a pathetic push back up, and then continue to go back down into the fundamental downtrend that we've been having since the entire Ukraine-Russian incident has started. Okay, now we could go as far down as here or even here in this area here before we start to pick up back up again. Okay, but I would usually be looking for a short position going into the beginning of this trading week where price is going to drop down to this area here or right around here before we continue to go up. Now, there is a possibility price can shoot up to about here or here before it continues to go back down. But the more likely scenario, we may range out in this area here, have a pathetic push up to about this area here, then continue to go down, or we may just continue to go down from this area right here, okay? But like I said, you wait for the charts to give you the breadcrumbs that you need before you go ahead and make the trade. And as I stated, due to how aggressive this down move is versus how weak this up move is attempting to be, this does not look like a sign of price turnover. This just looks like very aggressive retracement that came in, and it looks like price is about to start turning over towards the downside. Now, we don't know if it's going to continue its trend and continue to push price all the way down, but we can safely say that price is going to at least drop down to this area here or this area here, or possibly this area here before the euro starts to pick up any type of momentum or strength. Okay? So I hope that information was helpful for you guys. Happy trading.